Bismillahir Rahmanir Rahim. Assalamu alaikum. Today we're going to be talking about Islamic finance. What is Islamic finance and what it entails? And to shed more light on this topic, in studio we have Professor Dr. Ahsan Lahsasna, who is the Associate Professor holding a Master's and PhD degree in Islamic law and Islamic jurisprudence. He is also a Sharia advisor, a certified trainer, Vice President of Malaysian Financial Planning Council, and the Academic Director of Singapore Islamic Finance Academy. But we are very privileged to have him today in our studios, and special thanks goes to Akil Consultancy, who have enabled the visit of Dr. Ahsan. Akil Consulting was incorporated with the aim of providing support in the development and growth of Islamic finance in the industry in Kenya and the other regions, located at Mara Road, Upper Hill. Welcome to the show.
Thank you very much.
You are a guru in Islamic finance.
Well,
so how would you define Islamic finance?
Okay, Bismillah ar-Rahman ar-Rahim, wa salatu wa salam ala Rasul al-Kareem. Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh. First of all, I would like to express my thanks to the Horizon TV for this kind invitation to speak about Islamic finance. Islamic finance, basically, you may say it is a kind of set of rules and principles governing the operations and the business of the banking.
Yeah.
Well, these institutions basically can be a banking, meaning commercial bank, can be investment bank, can be takaful operators, which is the Islamic insurance, and can be any kind of company as long they declare officially or they are licensed by the regulators such as the central bank or the security commissions licensed to operate in Islamic finance. So if they have that kind of licensing, so there are a set of rules, principles. Normally it is translated in a form of standards and guideline, and sometimes act to govern their business operation to ensure that their business operations all the way comply with Sharia rules. That's basically what Islamic finance is about.
Okay, so what is the difference between Islamic finance and Islamic banking and conventional banking?
Actually, there are a few differences. Maybe I will highlight a few of them. But one of the major differences between conventional banking and Islamic banking is that the core business of the conventional banking is based on extending loan. So basically, the financial institution in the conventional framework, their core business is to extend loan and, of course, charge interest. So it is a money lending business. This core business of money lending is not allowed in Sharia because it is an interest and Sharia does not allow it. And as a result of that, the money lending has been removed from the core business activities of the Islamic banking and has been replaced by a set of Sharia contract that basically govern the different business operations of the financial institutions. I may give some example, like for example, we have a contract of murabaha, we have a contract of mudaraba, musharaka, wadi'a, and others. These Sharia contract basically govern different application in the banking system, being in the deposit side, being in the financing side, being in the trade finance, being in the wealth management, or being in the treasury activities. Core business of financial institutions in the conventional money lending does not exist in the space of Islamic finance, but it has been replaced by a different contract. Now, what is important in Islamic finance is that the selections of a specific contract will determine the type of relationship between the financial institution and the customer. If I give example, if we have murabaha, so is a contract of sale. So we have a relationship of buying and selling, or a buyer and a seller. If we have, for example, ijara contract, so we have a relationship of lessor and leasing. If we have, for example, a partnership which is musharaka, so we have a relationship of partner one and partner two, and so on and so forth. So as long as the contract change, the type of relationship, legally speaking, and from Sharia standpoint, will change. This is why core business of the conventional is borrower and lender. But in Islamic finance, the institutions can be the relationship, of the institutions, or the relationship between the institution and the customers can be lessor and lessee, can be a buyer and a seller, can be principal and agent, can be entrepreneur, an investor, can be a promisor and promisee, can be agent and principal, and so on and so forth. So the relationship will be shifting according to the contract, but each operates within a financial intermediation governed by the central bank. So if you look in overall classification of the contract of Islamic banking, you may classify them in overall class of trade, like murabaha, salam, tawarruq, and istisna and the like, and the classifications of equity, such as the musharakat contract, like musharaka and mudaraba, and the lease contract. And in addition to this three core classification, there are additional one which represent supporting contract, like kafala, like mortgage, which is rahan, wadi'a, qard, and the like. The package will constitute the different activities of the Islamic banking, and that's how Islamic banking is making money. So money generated and profit generated in the conventional space or in the conventional banking is through interest. The profit generated in the activities of the Islamic banking is through these different contracts. It can be profit from sales, it can be a rental generated from lease, and it can be a return from an investment, and it can be a fee from a service provided. That creates the wealth accumulations for the Islamic financial institution. Of course, these are one of the measures. In addition to that, maybe one important unique in Islamic financial institution is that in the Sharia governance structure, there is what's so called the Sharia Supervisory Board, or we call it the Sharia Board. That Sharia Board does not exist in the conventional banking, but it does exist in the Islamic banking, and their role basically to ensure that the operation of the Islamic banking activities all the way in compliance with Sharia, so that they are basically the lines of defense. They represent basically the stakeholders to ensure rules and principles of Sharia has been preserved in the operation of the banking, in offering different products and services to the customer.
So when Islamic finance was being and banking was being introduced,
Yeah.
who was the target audience? Was it just for Muslims, or can everyone also be involved in it?
Well, Islamic banking basically is for all, for Muslim and non-Muslim. And it is meant for Muslim countries and non-Muslim countries, and meant for local and international. And if I may share you some of the example in Malaysia. In Malaysia, 60% or maybe more than 60% of the stakeholders of the consumer of the Islamic banking are non-Muslim, mainly dominated by Chinese. And if you go beyond that, you may see some position in Islamic banking, senior positions in a different area are held by non-Muslim. So meaning that the operation side and the product offering, being a stakeholder or shareholders, can be Muslim or non-Muslim. And the reason being is that the Islamic banking provide value propositions, ethical banking, responsible banking, banking that is in line with the ESG banking, which is in line with the SDG, clean environments, ethics and value, and so on and so forth, avoiding toxic products, speculations, uncertainty, gamblings, and and harmful activities to the society. That's why it's make it more convenience, consistent, sustainable, backed asset base in their business operation, and it is more related to real business and economic on the ground. That's why it attracts a lot of basically attentions from non-Muslim, from Muslim and non-Muslim. Just to add one point, if you look at the Islamic finance globally, you will see that a non-Muslim country have adopted Islamic finance, and not only adopted Islamic finance, declared to be a hub in the region. We have London, for example. They have 5 Islamic banks, and the prime ministers, the former prime minister, basically declared that they want to make London the capital of Europe in Islamic finance. Recently also, the France declared that they want to be the gateway of Islamic finance to Africa. And we have Singapore trying to take the leadership. Then we have Hong Kong trying to take the leadership. So you can see that some non-Muslim countries basically are trying to, not trying basically, they have already embraced Islamic finance, and they provide, they adjust their law, their regulations their guidelines to facilitate basically the business operation of the Islamic banking. We have, for example, Hong Kong that has been issued sukuk twice. We have Singapore and other leading country. So basically, Islamic finance become recently, especially after financial crisis, welcomed by not only by non-Muslim, but by the international conventional community. I'm referring here precisely to the World Bank. I'm referring to the IMF. I'm referring to the basically leading financial institutions in the US and the UK, whereby the leader economists try to look to the Islamic finance as a new phenomena that can be alternative to the conventional finance. And one of the reasons is that Islamic finance has proved its resilience in the financial crisis. And despite the financial crisis, it is always recording double-digit growth, which basically has an implications on the economic and finance in each country.
As you have said, Islamic finance is thriving very well. And you're from Malaysia, and in Malaysia, it has been quoted to be one of the countries that is doing very well in Islamic finance. And here in Kenya, Islamic finance started in the year 2007.
Right.
What are the tips and tricks to your support, and what can Kenya emulate from you?
Yeah, actually, that's true. Malaysia is still maintaining the leadership of Islamic finance, and it has become a benchmark when it comes to the Islamic banking or Islamic finance in general, or specifically when it comes to the sukuk market. And that kind of leadership basically has been obtained based on few factors and reasons. I may just highlight some of them. I think one of them is basically the strong support of the government, strong support of the Ministry of Finance, strong support of the Central Bank and the Security Commission.
Yeah.
Malaysia is operating in a dual banking system with the dual legislations. So there are specific laws that govern the Islamic banking operations in the banking and takaful and also in the Islamic capital market. They have what's so-called Sharia board at the national level, at the central bank, and another one at the Security Commission's level that govern the Islamic, what's so-called Islamic capital market. The other thing is that there are what's so-called ownership taken by the regulators to facilitate the operation of Islamic banking by adjusting law, by adjusting regulations. And actually what they have done, one of the very important initiatives of the central bank, they have created what's so-called the harmonization committee, which consists of central bank, security commission, some governments, related ministries from the industry, from the lawyer, and from Sharia scholars, with the objective to look basically what are the clashes between the operation, between the law, and how you create a kind of harmonization to smoothen the operation of the Islamic banking. I think that effort is very crucial and very important because it makes the operation of the Islamic banking legally clear. It creates uncertainty and consistency in the operation. Other factors that make it a bit successful story may be the comprehensiveness of the market financial system. In Malaysia, we have a banking, Islamic banking, we have Islamic insurance or takaful, we have re-takaful, we have Islamic capital market, we have a stock market. Actually, the stock market of Malaysia, the Sharia compliant stock market, exceeds 60% from the total stock market of the security commissions. They have private equity, they have venture capital, they have ETFs, they have REITs, they have a sukuk issuance, and so on and so forth. So it's a kind of a very comprehensive market, very diverse. We have, for example, money market, which is a very crucial to manage the liquidity among the Islamic financial institutions in case you are short or you have a surplus funds. So I think that's creates a very comprehensive ecosystem. Of course, that one is also supported by human capitals developments, which is an important aspect, meaning educations in Islamic finance, whereby the central bank has established university and research house. The first one is INSIF, the second one is ISRA, that address basically the issue of human capital and the challenges of the industry. And in addition to that, we have, for example, the Association of the Sharia Advisor, we have the Malaysian Takaful Associations, we have the IBEAM. So many associations, many education providers, professional training, executive programs, degree and master and PhD provided to provide the kind of talent and supply. So to basically keep pushing the Islamic finance operations at the what's so-called very prominent standards. I think that's maybe some of the facts that, in my view, that has contributed in overall to the successful story of Malaysia taking the leadership. And I think the main one, I may just repeat it, is a very strong support of the central bank and the security commissions in preserving basically the interest and the expansion of the Islamic finance.
One of the factors you mentioned is the role of Islamic scholars in the success of Malaysia. Maybe you can expound on that and tell us their main importance in this journey.
Basically Sharia scholars, or we call them the Sharia advisors or the Sharia board. It's a very important corporate governance organ in the structure of the Sharia governance of the Islamic financial institutions. They are basically the stakeholders and the custodians that preserve the interests of the Sharia. And they are the one, basically, the fans on the theory level before implementation, meaning that they will go through revisions and examinations on the structure of the product, on determining the conditions of the legal documentation and the sequence of the executions, and whatever material related to the product to ensure it is a Sharia compliance. There is no violations of any Sharia rules and principle. Consistence basically contribute to the benefit of the Ummah, then the endorsement and approval will be there. And in case there are any mistakes or any loopholes here and there and any gaps that can be found from the Sharia review or the Sharia audit, they will be presented to the Sharia board that also make a contributions, discussion collectively in order to address what is the issue basically and how the issue will be resolved and how should be addressed to ensure that the Islamic finance is consistent all the way. In Malaysia, we have basically a two-tier structure. The first one is at the national level. So we have Sharia Advisory Council at the central bank that basically look after banking and takaful. And the other one, Sharia Advisory Council at the security commissions, national level, look after Islamic capital market. And we have Sharia board at the institution level, like for example, Islamic banking, takaful. So we have two-tier structure of governance. The first one basically look after the macro issue, the very general that represent challenge of the nations to create consistency in the operations, to make a clarity and to put like a general guidelines to the industry. And the Sharia board basically will honor those resolutions and they will be honored in the practice. And of course, they further advise the financial institution on the micro level and the operations and the implementation. So basically, the existence of the Sharia board is required by the regulator, meaning it's part of the licensing requirement, meaning you have to have a Sharia board within your operation or within your Sharia governance structure. The only numbers that may vary, maybe in like, for example, if I give IOFI required minimum 3. In Malaysia, the number has been increased from 3 to 5. So other may have a different number. This is based on each jurisdictions. But the bottom line, the existence of the Islamic financial institution is very important because that the ticket to the penetrations, but the assurance of the Sharia compliance that make sure that your money is managed in a Sharia compliance manner. Financing is provided in Sharia compliance manner. Your investment is managed in Sharia compliance manner. So basically the public has given the trust to the Islamic finance institutions or the Islamic banking in general because of this corporate governance organ of the Sharia board that they are performing their duty to ensure the compliance is always basically honored and implemented and preserved.
You have talked about their importance, but there are a number of Islamic scholars who do not support Islamic banking windows. What is your opinion on that?
On the Islamic windows, basically, I may say here, in my humble opinions, it depends what is the challenges that each jurisdictions is facing. How long you have been in Islamic banking. Like in Malaysia, we had windows. In the past, there are subsidiaries, full-fledged Islamic banking. There are many windows.
Yeah.
And it was operating for many years. But when the central bank looked that it is time to stop windows and shift to a full-fledged subsidiary, so action has been taken. Now in Malaysia, windows are not allowed, and all the windows has been pushed to be converted in full-fledged financial institutions. But this one after many years. So here, for example, in Kenya or any other country, typically you expect that the operation may start as a window.
Yes.
So it may take some times. So only the regulator, only the financial institutions themselves, only the market will tell when exactly we should go out and be full-fledged Islamic banking. To me, it's not about whether you are with or against, so definitely we would prefer full-fledged subsidiary, but sometimes the circumstances, the conditions, the ecosystem, the readiness of the bank, the manpower, the talent, what's called the expert, the size of the market does not require to stand as a subsidiary. I know here the Muslim community, for example, is relatively small. So imagine you have a lot of full-fledged Islamic banking subsidiary. So basically, it will be a little bit tough competition on the ground. To me, it is left to the evolution of the market.
Yeah.
To me, it is left to the need when it is the right time to make the shifting. Like it happened in Malaysia. We experienced windows, but a time came to shift from a big window to a full-fledged financial institutions.
So inshallah, I know that Kenya, we are headed there.
Yeah, inshallah.
And
Yeah.
alhamdulillah, and we wish you all the best in your future endeavors. And mashallah, may Malaysia keep on winning, and Kenya, we are coming next.
Yeah, inshallah.
Thank you so much for gracing the show.
My pleasure, inshallah.
Well, you have heard all about Islamic finance and banking. That is the way you go. That is the way to go. I have been your host, Aisha Khan.